Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the gold market, although actually on the technical side it's actually not too many things to update, because on Friday you can see we've got inside session. So despite the volatility that we've got on the payrolls report, here's mostly the range stands inside of the Thursday. And from that standpoint of view, actually the technical picture hasn't changed. Although on fundamental background, lots of things that actually has been missed by the mainstream and analysis, who mostly are focused right now on the jump of the import in the United States, on the problems in the logistics with the chain, with the China goods, with the problems with the negative gross domestic product, recent payrolls. All this stuff is really important. They make sense. But at the same time, there are lots of other moments that stand behind, and not many people to pay attention to it, while these moments actually are major drivers for the gold market in the long term. So this is particularly the subject of our weekly report today. On a technical side, what we could say right now, daily trend is bearish and context stands bearish, but at the same moment we have kind of the stretch pattern, so market hits daily oversold in a support area, which means that definitely this is not the good point for taking new shorts. We need to wait for some pullback. So from that standpoint of view, there are two conclusions. First, theoretically, we could consider taking scalp long position on intraday charts, or and second, actually, we have to wait for a bounce to consider the short position, depending on the direction that you would like to trade. So on the fall time frame chart, we see the ABCD pattern that gives a target on the OP around 31.30. This is potential destination, nearest destination point for a possible downward action that we have. On the hourly chart, everything mostly stands quite the same compared to Friday. The only difference is that it's actually reaction from the nearest standing fib level on the payrolls report. So market starts upward action, shows the pullback, and currently for long position taking, you have actually nothing special. You do not have some pattern here or something. So if you decide to take the long position, you just will make the bet on a possible daily oversold, and you will hope that market will just show a bit deeper retracement. In this case, your invalidation point has to be somewhere around 32 area with these lows. So market either will have to move upward action right now, or this idea with the bullish entry will be destroyed. Our basic scenario in the current circumstances, when they having this type of action on the back, doesn't suggest taking the long position here. It doesn't mean that it will not happen. It doesn't mean that it will not work. Actually, this action we're expecting to get, but we do not want to bet the money on it, just because it is too weak background. So just the pullback and minor retracement. So no patterns, no some clear signs of the upward action, something. So the background is not very strong. And the second moment, if we already talked about this on Thursday and Friday, the better level to consider taking the short position, at least the first level that is suitable to it, is a confidence resistance around 33.06, 33.15. This is more or less a strong level, because this is confluence, this is also former trend line, and big chances to get at least a reaction down at the first touch of this level, which is actually great chance to move the trade on the break-even level. So that's why we're considering mostly this level. So by our basic scenario, we still think that For a bullish position, it's still weak background, and we're not considering it. Although, as I said, it's not forbidden. So if you feel some confidence or you have some your own indicators that shows you that you could take the position, it might be taken. And the second, our basic view is that we prefer to wait, not hurry up with the taking short position immediately, just because of the same oversold that we have on the daily chart, and wait for a bit more extended bounce somewhere to the 33.10 level. So that's two major thoughts from the current